If there's one thing in this world that a lot of billionaires have in common, it's that they've invested in real estate. And if you've watched any of my videos here, you know I love investing in real estate through REITs, real estate investment trusts. I carve out roughly 20% of my portfolio for REITs. REITs provide you indirect exposure to real estate. REITs provide solid dividend yields, and REITs allow you to diversify your real estate exposure in public markets. However, REITs are just one way to invest in real estate. Many REITs are traded on the public markets by way of stocks. We talk a lot about them. We talk about Realty Income or Store Capital, which recently got purchased. Public Storage, these are all REITs that you can invest in. You're investing in the company that owns all of these properties, but you're also investing in the management company. It's an indirect way to own real estate. However, the value of your investment is decided based on the public markets. This leads us to another way to invest in real estate, and that is through private real estate markets. This is where the value of your investment is less predicated on the volatility from a public stock market index. And with that being said, I think you're really going to enjoy this video I have in store for you today. It's going to be unlike other videos that we have done in the past. And in today's video, I'm going to be interviewing a CEO in the private market space. They're going to dive into different investment opportunities that are out there and what they're looking at and what the private markets are in general. So make sure you stick around because I think you're really going to enjoy what I have in store. Hey everyone, Mark here, back for another video. And again, this is going to be unlike other videos we have done. We will be interviewing the CEO and CIO of Citizen Mint, Josh Hile. For over a decade, Mr. Hile was the director of investment strategy for a $16 billion investment advisor firm. And this has helped him pave the way as the leader, the CEO and CIO of Citizen Mint, which is focused on impact investing within the private markets. So here is an interview I recently had with the CEO and CIO of Citizen Mint, Josh Hile. Josh, thank you so much for taking the time to speak with us today. As you know, on this channel, real estate investing is near and dear to my heart. We talk a lot about real estate investment trusts that are available to investors. We also talk a lot about dividend stocks, but something I don't think is covered a lot is opportunities out there in the private industry or the private markets. So I think it's a great opportunity to kind of learn about some of those different opportunities. And with that being said, could you explain to our viewers a little bit more about what the private markets are and also a little about the type of impact investing that you guys focus on over at Citizen Mint?
Mark, thank you so much for having me. I'm so excited to be here. Private markets are really anything that is not traded on a public exchange. It could be private real estate, private debt, venture capital, private equity. There's numerous different asset classes within the private markets. And really, there's a lot of different reasons that people want to invest in private markets. It could be diversification of your portfolio away from public equity markets, where there's a lot more correlations. It could be increased investment opportunities, just because there is so many different asset classes within the private markets. It could be return enhancement. There is this thing called the illiquidity premium, where essentially locking up your money for a longer period of time, you expect to have a little bit higher of a return. There's also the ability to align your capital with your personal values or interest. And also it's a long-term focus. So you want to invest for 3, 5, 10 years at a time, and you don't have to worry about what's happening in the public equity markets or macroeconomy at that point in time, because your money is locked up and you have that divestment in the future.
That's some really, interesting stuff because, we talk a lot on this channel about diversifying our investments, but a lot of the time we are talking about diversifying within individual stocks or ETFs. This just really focuses more on diversifying your portfolio as a whole, not just focusing on the public markets and what the stock market does, because a lot of these investments, are just tied to what the overall economy or an index in particular is doing. So this is a great way where you may not have as much volatility that comes with the stock market. So that's, that kind of transitions into my next question. Given where the economy is, some of this record inflation, we are seeing high levels of inflation that have really put pressure on the stock market and equities as a whole. Given that, how are the private markets impacted, I guess?
Private markets are going to be impacted in numerous ways. One thing is that they don't get marked on a daily basis like other
Sure.
parts of the marketplace. For, say, a place like private real estate, though, it is going to be significantly impacted because there's certain projects that might have penciled out before that aren't going to pencil out anymore because of these higher interest rates and what you can actually sell the project for in the future. Because essentially, at the end of the day, when you have net operating income from rents on, say, a multifamily build, and you have to pay higher interest rates, that's going to reduce your operating income from that project, and it's going to reduce actually the sale price. That said, on the flip side of that is that the affordability of housing has decreased for many. So this is actually going to increase the demand of multifamily real estate going forward. Because essentially, there was a lot of people who might have been able to afford a house previously because of low interest rates, but now they're higher interest rates. So you have this massive increase in future multifamily housing, and we're already underbuilt for multifamily housing, and that's why we are focusing on that as part of the Citizen Mint platform.
Yeah, it's definitely like a catch-22 right now, where a lot of folks have been waiting on the sideline, or say they've been waiting on the sideline to kind of get into real estate. We're now seeing a little pressure come off on, in housing in particular, but our interest rates are skyrocketing. I think I saw the other day someone quoted a 30-year mortgage at 7.5% just on a single family house. So that's just the affordability, like you spoke to, is definitely something to look at. Kind of piggybacking on where we're at with the market right now. What are top, we'll call it, what are your top three investments, or three of your top investments that you guys are looking at in terms of impact investing over at Citizen Mint?
So our three top items that we are looking at from an investment perspective is one, affordable multifamily real estate. In the US, we continue to have this massive demand outstripping housing supply. And so affordable housing is actually one of the most in-demand property types and provides strong downside protection, especially during recessionary environments. If you think about if people are getting laid off or just trying to reduce their expenses, they're going to look for housing that's a little bit more affordable compared to maybe what they had in the past. Number two is going to be private equity and venture capital. The year you make an investment for private equity and venture capital is incredibly important, as investing at low valuations is likely to increase the ultimate return of your fund. So we've seen equity valuations come off in the public markets. The same thing has happened in the private markets when venture capital firms are putting money to work or private equity is putting money to work. So really, they're getting better valuations, and the best returns on venture capital and private equity were from 2008 and 2009. So I think we might see a little bit more of that. So putting money to work during these times, even when it feels not great to do that, is actually the best time to do it. Number three is private debt, including mezzanine debt, preferred equity, and direct lending. Mezzanine debt and preferred equity are very similar in substance, even though they are structurally different, but essentially it is debt that is usually a loan to a developer to start or complete a construction of a real estate asset. We're excited about the higher interest rates around these forms of debt for affordable housing that provides the investor with greater returns, and given the more challenging market environment. Direct lending is really loans to private equity firms, and those are variable loans. So essentially, as interest rates increase, and if we see the Fed continue to increase interest rates, your interest rate on those loans gets to increase as well. So it increases your total return. And we really like the protective nature around all these forms of debt. And so we're really excited about that at the current point in time.
Absolutely. And you touched on a lot of those, the mezzanine debt. I've seen a lot in the market, being in the real estate industry myself. And I think there are a lot of opportunities that, a lot of folks and viewers here might not know are available to them. Sure, there are certain restrictions for folks to kind of get involved in that. But I just wanted to first off say thank you so much for kind of, explaining all of this to our viewers, and, giving that knowledge, and also some of those, top three, some of these investment choices that you guys are looking at. And if viewers do have some questions on how to hear more about the investments you guys are looking at, or Citizens Mint, maybe you can kind of tell them quickly where they can go to kind of get some of those resources.
You can go to citizenmint.com and find numerous resources, either about investment opportunities that we might have available at the current point in time, or resources around financial education, whether it relates to different private market opportunities, whether it relates to real asset opportunities, or just opportunities within private debt and financial education. So we have a lot of different resources up there right now.
Awesome. Josh, thank you so much. And for those of you that are looking for more information, I will leave a link down in the description below for citizenmint.com, where you can go and contact Josh and the team over there and find more resources. So Josh, thanks again for joining us today.
Thank you, Mark. Really appreciate it.
So there you have it, folks. That is our interview, and that is private markets. Hopefully you found value in that interview. I know the idea and the private markets in general may be a new concept for a lot of viewers out there, but Mr. Hile was able to kind of break down what the private markets are, what types of investments are out there, and what are 3 primary investments that they are looking at in the year 2022. If you're looking for more information on Citizen Mint, you can go down to our description below where you will find more information to their website, and you can definitely check that out. But if you loved today's video, then do me a huge favor and click that like button, as that is huge for the growth of this channel moving forward. And in the comments section down below, let me know if you have any experience in the private markets. And with that being said, we will see you next time. Take care.